Ari, Sass, one stock you like over at MD Sass is Aramark. Those shares have been fairly flat so far in the first half of 2015. What's going to take them higher in the rest of the year?
Sure. So what we like about Aramark, it's an outsourced food service provider. So they provide food services for stadiums, hospitals, prisons, universities. What we like about them is if you benchmark their margins against the leading comp, which is Compass Group in London, they're several hundred basis points lower in margin. They have a new CEO, Eric Foss, came from Pepsi Bottling. We think they can grow their margins several hundred basis points over the next few years. That translates into about 40 to 50% in earnings growth. So if it can hold its multiple, we think it's a fairly big stock, but it will take a while until they really get those margins up for the stock to work.
And you're also bullish on Sinclair Broadcasting Group. Now, usually the owners of TV stations do very well in election years,
Right.
A lot of political spendings. They also pay a nice dividend, I think about 2.4%.
Right.
So tell me why you like this stock, other than those reasons.
Sure. Well, we have this stock in a covered call strategy. So what we've done is we've bought the stock, we've sold calls against it. And when you do that, you have a blended return of in the double digits, low teens. What we like about Sinclair, one, we're entering the political spending season. We think they're going to be a huge beneficiary of that as the largest broadcast affiliate group in the country. And second, they're collecting retransmission revenues from the cable operators. The broadcasters generally are about a third of all viewing, and they have much less than that in retransmission fees. So we think there's a lot of upside in their subscriber fees with the cable operators, plus you have the benefit of the political revenue coming in 2016.
Another stock you're positive on is gaming and leisure properties.
Right.
They're buying Pinnacle's real estate assets. There's a lot going on at this company. They pay around 6% in terms of their coupon. So can they afford this all?
Sure. So gaming and leisure properties is the only REIT devoted to acquiring casino assets, as you pointed out. Pinnacle's casino assets, we think, at the current bid, is worth about 15% boost to free cash flow per share for GLPI. So it's a great deal if they get it. They definitely can afford it. It'll be a combination of stock and debt. They've already spoken to the rating agencies. They'll maintain their rating. So the stock, even in the stock deal, we think it's about 15% accretive to free cash flow per share. So it's a very good deal.
And then finally, you're a fan of Six Flags. This stock's up over, I think, 12% so far this year.
Right.
So what I'm imagining is that lower oil dividend is finally paying off and people are going to the theme parks.
True, and I think investors like it because it lacks the foreign exchange issues that a lot of multinational companies have. So you have a very domestic company tied to consumer spending. As you pointed out, lower gas prices is very good for them. Two other things we like, we think there's international licensing opportunities. So we think we're going to see licensing to Asian and Middle Eastern companies looking to open up a Six Flags branded park internationally. That's a huge opportunity for them. And second, we think there's pricing opportunities. If you look at Cedar Fair, which is a comp in the amusement park segment, Six Flags prices lower than Cedar Fair, but the demographics of Six Flags suggest they can actually price it higher. So pricing and international royalties are exciting for us as well.
All right, thanks a lot, Ari.
Thank you, Greg. Pleasure.
Thank you for watching The Street.